All right. Good morning, everybody, and happy Wednesday. Today is May 29th, 2024. And the top story this morning is the bond market and the flops that we had in the U.S. Treasury auctions yesterday. Yesterday, there was two back-to-back auctions. We had the 2-year and the 5-year auction yesterday. The 2-year, I believe, came first. It was around 11 a.m. Eastern time, and then about 2 hours later, we had the 5-year auction. Yellen Co. were issuing $139 billion between these two auctions. Just very large auction sizes, and we're starting to get into the area now. Tax season is behind us, and we're starting to see bigger auction sizes. There's just too many of the dang bonds being issued. The government is just borrowing too much freaking money. Right? This is obviously not big news, but it's a problem that is getting worse. And here's the thing with bonds. When the supply goes up and the demand stays the same, what happens to price? Well, price goes down. And keep in mind, with bonds, price and interest rate are inversely correlated. So as Aunt Janet issues all these bonds, sending the prices lower, the interest rate on those bonds goes higher. And this market does not like higher interest rates. Now, we're sitting here. If you ask the average person on the street, what do you think interest rates are going to do next year or across the next few months? The average person is probably going to tell you interest rates are going to go down because we keep hearing all about how the Fed is going to lower rates. Oh, they're going to cut. There's going to be 7 rate cuts this year. Now it's 1, but you get the point, right? Everybody seems to think interest rates are going down, but we're only talking about the Fed funds rate, the overnight rate. The Fed does not directly control the long end of the yield curve, those longer duration treasuries. And, well, as we've seen pretty much since the start of the year, despite all this talk about rate cuts and lower rates, the 10-year treasury yield has marched consistently higher. Even higher yesterday with those two back-to-back bond auction flops that we saw yesterday. There just wasn't enough demand to satisfy all of that bond supply, and so the price had to drop, the rate had to rise. Primary dealers took home a little bit more than they're used to, and, well, the bond market just didn't like that. We had a sell-off in bonds yesterday, and that affected pretty much the whole long end of the yield curve. The 10-year treasury rose almost 9 basis points yesterday. It's up again this morning. We're back over 4.5%. Last I looked, about 4.56, 4.57 for the 10-year treasury. So we keep talking about rate cuts, but rates are moving higher. And the Fed doesn't control that long end of the yield curve. Now, they can mess around. They can let the short stuff roll off and take some of the proceeds and buy some of the long stuff. Treasury can try to manipulate it with its treasury buybacks. But at the end of the day, the Fed does not control that long end of the yield curve. It does what the market tells it to based on supply and demand. That is, unless the Fed starts burring again, printing money and buying down those treasuries. And I think a lot of people realize that's probably going to end up happening sooner or later. Maybe that's why gold and silver are rallying so much. Also going on this morning, big announcement in the energy space. We've got ConocoPhillips is buying Marathon Oil. That is a massive merger, $17.1 billion deal. Looks like Conoco's paying a 14.7% premium for Marathon. So we got Marathon shares are way up this morning. That is the third massive merger in the energy space, particularly the oil and gas space that we've seen just this year. We've had 2 other big deals announced, Exxon Mobile buying Pioneer Resources and also Chevron buying Hess. And now we've got Conoco buying Marathon. So, I hear all about the energy transition and, oil and gas are going away because Kathy Wood said everybody's going to buy electric vehicles and we're not going to need oil anymore. Funny, because I see oil companies spending tens of billions of dollars to buy each other. That's not something that happens in a struggling industry. That's something that happens in an industry that is gearing up for expansion. And, by the way, speaking of the energy transition, yesterday was a very bad day for the wind industry. Didn't get a lot of press because the financial press is towing this stupid Greta party line where, wind and solar are going to displace everything and we're all going to ride to work on high-speed electric roller skates and nobody's going to need oil and gas. Well, Siemens Gamesa announced that they are laying off 4,100 people in their offshore wind department, mainly driven by quality controls. Whoops, those wind turbines, they don't work so well. And then Shell announced that they're cutting their offshore wind division also. So two big stories about cutbacks in offshore wind happened yesterday. Where is this energy transition? Do you guys, it's got to be around here somewhere. No, that's my cat down there. Not the energy transition is not hiding under my desk. Where is it? The offshore wind industry is collapsing right now due to quality control issues. And, I come from the Northeast U.S. I was raised in New Jersey. And for years, they've been trying to build these offshore wind turbines off the Northeast. And these projects, they're billions of dollars over budget. A lot of them are collapsing. The developers are just walking away from the project after spending all of this money, partially driven by these quality control issues over at Siemens with their windmills. And they're killing freaking whales. I don't know if you guys knew about that one, but whales in the Northeast U.S. have been beaching themselves at an alarming rate for the last couple of years, probably because of all this ground-penetrating sonar that they're using to try to map the seafloor for laying the footings for these giant windmills. They're killing freaking humpback whales. And look, I used to work in nuclear power, and my wife and I both lost our jobs on the same day because the environmentalists forced our nuclear plant to shut down because we occasionally killed bluefish that sell for 35 cents a pound across Barnegat Bay at the fish market in Viking Village. And now the windmills are suddenly allowed to kill humpback whales, and we're all like, yay for the energy transition. All right, go get arrested for the cameras again, Greta. You're doing a wonderful job with the energy market. Period. Hard stop. End of rant. Moving on from that subject. Sorry, guys, I get a little heated on this subject. It hits a little close to home for me. Also going on, we got silver, had a fantastic day again yesterday, closed above $32 an ounce, although it's down a little bit this morning. The price in Shanghai continues to rise. We've now got more than $4.40 of spread between the price at the COMEX and the price in Shanghai. So there's still upward pressure on metals prices being driven by Chinese demand. Again, Mr. Slammy seems to be in the driver's seat this morning, but I don't think that's going to last too much. So congratulations to the silver bulls. I like the shiny. American Airlines just announced a big cut to their forecast for the second quarter profit, and it comes right after Memorial Day. That's kind of interesting. One of the busiest travel days of the year. It comes by, and then a day later, one of the biggest airlines says we're seeing a big decline in demand for travel. Now, I'm hearing these stories about, we expect a record travel season. Is this just more happy talk, more soft landing BS? Because if this is supposed to be this record summer travel season, why is American Airlines cutting back on their forecast? So all the airline stocks are down this morning on that news. Keep an eye on what's going on in Japan also, guys. The Bank of Japan has been strangely quiet for the last couple of days. Even though the yen continues to fall, we're looking at 157 yen to the dollar. This is just a few weeks after the Bank of Japan intervened in the Forex market to try to prop up the value of the yen. The 10-year Japanese government bond, or the JGB, the yield on that is rising. It's currently sitting at 1.08%. I know that's laughably low, but for Japan, that's the highest interest rate on the 10-year JGB since 2011. That's up 5 basis points this morning. So we've got downward pressure on the yen, upward pressure on JGB interest rates, and the Bank of Japan is doing what it does best, printing money and nothing. That's pretty much all they know how to do. Something's got to happen over in Japan. Their currency is in collapse. That's the third largest economy in the world. And the spread between U.S. interest rates and Japanese interest rates keeps getting bigger. Sooner or later, they're going to have to do something. Also, we've got two interesting stories in retail this morning. We've seen a lot of stories about same-store sales were down and how the consumer is tapped and broke. And there's a mountain of data to support all that, especially the big box retailers like Target wasn't doing so well. Walmart was a shine, kind of a silver lining to that gray cloud. But this morning, we got two earnings reports, Abercrombie and Fitch and Dick's Sporting Goods. And both of them were excellent earnings reports from those two retailers. And they're not two stores that I would expect to be doing particularly well in this consumer market. But we don't just report the news that we like here. We have to talk about the stories that go against the narratives. And if you look at Abercrombie's earnings and Dick's earnings, well, the American consumer is doing just fine. Well, what the hell? I guess credit cards, buy now, pay later. They're certainly not earning all that much more money, not enough to cause a 22% jump in sales at Abercrombie and Fitch. Whatever they're doing over at that company, it's working. And Dick's Sporting Goods is reporting a big increase in apparel and sneakers, seeing a higher store traffic, bigger ticket sizes. Across the board, things looking pretty good over at Dick's Sporting Goods and Abercrombie and Fitch. So we got a lot of news going on this morning, guys. Why don't we shrink my big melon of a head and let's see what's going on in this market right now. Oh, by the way, don't forget that like button and that subscribe button right next to it. If you're new here, come have your coffee with the melon heads every morning. The S&P 500 right now, though, down 38 points or 0.7% lower. I think that those back-to-back bond auctions yesterday probably wearing on markets a little bit. Higher interest rates, not typically good for stocks. The Dow is down 256 points or about 0.2% this morning, also heading sharply lower. And the NASDAQ is leading the way lower here, down 159 points or 0.84% lower. So stocks down pretty much across the board here. The U.S. dollar, meanwhile, is higher this morning, 13 basis points to the upside at 104.75. Higher interest rates typically means a stronger dollar here. And let's look at the bond market here. Again, a little bit of red, a little bit of green this morning. Most of the big moves in the bond market happened yesterday after those auctions, but the long end is moving higher here again today. The 30-year is at 4.699, up another 4 basis points this morning. The 10-year is at 4.571, up 3 basis points this morning. That's after being up almost 9 basis points yesterday. So you add up those 2 days, a big move in the 10-year. The 2-year is at 4.954. That's actually down a fraction of a point this morning. And the 1 month is at 5.378, pretty much where it's been. Now, we got this one in Barron's this morning talking about those auctions from yesterday. Bond traders didn't like back-to-back Treasury auctions. Bond investors were tasked with buying more than $100 billion in U.S. debt on Tuesday, and it didn't go down well. The Treasury Department sold $69 billion worth of 2-year notes at 11:30 a.m., and just 90 minutes later, it offered $70 billion in debt expiring in 5 years. Both auctions were weak, with investors demanding 4.553% at the 5-year auction. That was higher than the 6 auction average and 1.1 basis points more than the yield sought in pre-bidding deadline. The difference is called a tail and indicates that the Treasury had to entice investors with higher rates to sell its bonds. The upshot? Across the curve, yields hit their highest values. Higher yields lower the value of bonds in an investor's portfolio. And I'm not really seeing why that's an upshot here. Barron's is saying, oh, the good news is bonds are worth even less than they were yesterday. Keep in mind, we've got banks that are in trouble across the country because of all the money they lost on bonds, and that problem got worse yesterday, and Barron's is saying that's the upside here. Okay, good luck with that one, Barron's. The yield on the 2-year moved close to the 5% mark. The yield on the 5-year was at 4.579, a 4-week high, and some of the impact was likely felt in the equity market. So those back-to-back auctions caused some trouble in stocks yesterday. Take a look at this chart, guys. This is the 10-year Treasury yield. And this is going back to pretty much about a year ago, March of last year. Now you can see we hit that high. This was back like right around Halloween. That's when we saw that big sudden drop. Bill Ackman announced he's covering a short. Everybody started piling into U.S. Treasuries and yields started to fall almost to the day to New Year's. And then at the start of this year, interest rates have started rising. Now, guys, what I want to point out here is, look, all year we've been talking about rate cuts. All year we've been talking about interest rates going down. But look at what the 10-year yield has done. It has marched steadily higher since the start of the year. And we've got this support level down here that we bounced off of a couple of times. This thing is on pace to hit 5% again unless something big changes in the bond market. And again, when the rate cuts finally do happen, the rate cuts happen at the short end of the curve. We could conceivably see a scenario where the Fed is cutting at the short end and interest rates at the long end continue to rise because the Fed doesn't directly influence that. So rates are moving higher here once again. Looking over at the commodities board, looks like metals are taking a breather today. We've got spot gold is at $2,343. That's down almost $18 this morning, or about 0.75%. June gold futures at $23.43. Spot silver is at $31.84. That's down about 1/4 or 0.75% here. July silver futures at $32.04, down about a dime or 0.3%. So metals a little bit lower today after having a heck of a day yesterday. The intraday high here for spot silver was $32.29. So pretty good day yesterday for the metals. Copper's at $4.78 for July futures. July platinum futures at $1,050. That's down about 1.5%. September palladium futures at $9.64, down almost 2.5%. And July crude oil futures for West Texas Intermediate at $80.14. That's 31 cents higher this morning. Back above 80. We got an 8 handle in oil again this morning for West Texas Intermediate. It's pretty interesting to see that. Brent has been over 80 for a while now, but WTI has been staying pretty low. I wonder if that big merger between Pioneer and Conoco might be playing a role. Now, let's also take a look here at the silver chart. Again, we kind of hit a little bit of resistance. That's kind of that price that we were at a couple of days ago, right around $32. Looks like a little bit of a ceiling there. We hit it yesterday, closed above it. We're back below it this morning, down 20 cents. I'm not too worried about that. Let's see where we go for the remainder of the day, but I'm still feeling pretty good about silver here. And I didn't bring up my Bitcoin chart. I am remiss. Where's my Bitcoin chart? Here we go. Bitcoin is down another $316 this morning on Coinbase, right around $68,000. Still in that bull flag that we talked about yesterday. Also, by the way, back on silver. Sorry, I'm a little out of order this morning. The closing price in Shanghai yesterday was $36.34. Thank you to Bai Xiaojun on X, who puts this one out every day. We are looking at almost $4.70 spread between the Shanghai price and the COMEX price. The spread is getting bigger here. The tension between those prices is growing. Now back to the energy space here. ConocoPhillips to acquire Marathon Oil in a $17 billion deal. The deal gives ConocoPhillips shale assets in Texas and North Dakota. Oh, also the company announces a $20 billion buyback and a dividend boost while they're at it. Things looking pretty good for Conoco here. ConocoPhillips agreed to acquire Marathon Oil in an all-stock deal valuing the company at around $17 billion, extending a major buying spree among the largest players in the U.S. oil and gas industry. The move expands Conoco's footprint in domestic shale fields from Texas to North Dakota and hands the company reserves as far afield as Equatorial Guinea. It adds to a wave of recent mega deals as producers seek new drilling sites on a bet that oil and gas demand will remain robust for years to come. Greta, I guess you're just going to have to get arrested for the cameras again because the energy industry is not listening. The takeover agreement represents a 14.7% premium to the last closing share price for Marathon. The company said in a statement on Wednesday, the deal has an enterprise value of $22.5 billion. ConocoPhillips joins the ranks of major oil drillers pursuing production growth via recent acquisitions. In October, Exxon Mobile Corp accelerated the pace of Permian Basin consolidation with a $62 billion deal for Pioneer Natural Resources. That was followed later that month by Chevron's agreement to buy Hess for about $53 billion. So now you can add this $17.1 billion deal between Conoco and Marathon. And just to take a look here, it looks like Conoco stock is down about 1.2%, swinging back and forth, 1.2, 1.4% here, down $1 and change, trading at 117.26. And Marathon, ticker MRO, is trading at 29.23. That's up 10.5% here, or $2.80. Again, we're looking at a 14.7% premium Conoco is paying for those Marathon shares. And while things are looking pretty good in the oil and gas space, the wind space, not so much. Siemens Energy weighs cutting 4,100 jobs at the Gamesa wind unit. Siemens is weighing cutting 4,100 jobs at its troubled Gamesa wind turbine unit as the company enters talks with labor representatives on structural changes, according to people familiar with the matter. Structural changes, I guess that's German for layoffs. About 550 jobs could be cut at Gamesa locations in Denmark, while units in Spain could lose 430 jobs, in Germany up to 370, the people said, asking not to be named. Siemens Energy said in a statement that the company has started negotiations on restructuring measures for Gamesa, but will announce results of talks only after discussing details with all parties involved. The group has faced spiraling pressures from internal wind unit issues, including repairs of defective turbines, which have caused billions of euros in losses. So, you know what? Just keep shoveling tens of billions of dollars in euros and subsidies at these offshore wind turbines that don't work. They don't make much power. They break down. They kill whales. But you know what? We just have to kill the whales for the environment, right? It's to save the planet. Sorry, whales. Planet needs windmills. I guess that's the message. We're shutting down nuclear plants because of 35 cent a pound bluefish. But, you know, the whales, they just have to go. At what point, I have to ask, at what point did the save the whales people become the kill the whales people and look the other direction because we just feel so good when we look out the beach across the horizon and see freaking windmills? When did that become a priority? When did political dogma become a bigger deal than actually helping the environment? These are supposedly the follow the science people. I'm asking for a friend here. Somebody please explain this shit to me. Anyway, Siemens not looking so good. And Shell plans job cuts in offshore wind business too. Might as well get in on it. It's not a very good day for the windmills. Cuts are to be focused on Europe once again after new projects petered out. And by the way, these projects are petering out all over the United States also, even though we keep shoveling subsidies at them. Shell is preparing to cut staff from its offshore wind business as CEO Wael Sawan moves the company away from the capital-intensive renewable energy sector. The British oil major is set to begin layoffs within months, mainly in Europe, according to people familiar with the matter, who once again requested not to be identified. Anonymous sources really bug Jack. We are concentrating on select markets and segments to deliver the most value for our investors and customers, a Shell spokesman said. Shell is looking how it can continue to compete for offshore wind projects in priority markets while maintaining our focus on performance, discipline, and simplification. In other words, windmills don't make us money, so we're not going to build as many, and we're just going to let everybody down softly. Does this mean, can we finally put an end to these stupid commercials from Exxon Mobile and Shell and Chevron and all these oil and gas companies who put these diverse employees in hard hats on the screen and say, we're building the energy transition for tomorrow. Look at my hard hat and my windmill. But brought to you by the biggest polluters in the world, Shell, Chevron. Can we stop running those stupid commercials for once? I don't know. I just throw it out there. The optics of this energy transition narrative are so on their face, stupid, backwards, counterproductive, everything. And it's just like we just say these things to feel good about ourselves. And we don't care if we're actually helping the environment at all. We don't care if we're hurting industries and putting people out of work. As long as we get our talking points out there in front of the press, then we're helping and we're doing something. Look, just change the colors or put a flag in your freaking X profile and move on. Thank you. Period. Hard stop. End of rant again. Man, I'm fired up by these stories today. American Airlines shares sink after Q2 profit forecast cut and drags other airlines. Sorry, guys. The wind thing really got me fired up this morning. Shares of American Airlines slumped on Wednesday after the carrier cut its profit forecast for the current quarter, citing weakening pricing power despite expectations for record travel demand in the summer season. American Airlines shares were down nearly 8% in pre-market trading on Wednesday, dragging peers Delta, Southwest, and United, which all fell between 1.5% and 2.5%. The Fort Worth, Texas-based company revised its forecast on Tuesday and now expects second quarter adjusted earnings in the range of $1 to $1.15 a share. That's compared to previous expectations for $1.15 to $1.45 a share. So this isn't a small cut here. They're really cutting back on their forward guidance here. The carrier has made a strategic shift away from lucrative corporate travel in a bid to grow its market share in smaller markets. However, excess capacity in such markets has been hurting its pricing power. Now, guys, that's a pretty powerful statement right there. Some very loaded phrases. Excess capacity and hurting their pricing power. Now, we're supposed to have this record demand for travel in the airline industry. Then how do you get excess capacity? And if there's record demand, these airlines should have plenty of pricing power. So one of these narratives doesn't fit here. And at the end of the day, I'm going to go with the narrative that is driving these companies to lower their forecast because there's numbers and data supporting that instead of just feel-good talk about soft landings and, oh, demand is so super record high and it's the best economy ever. It's clear now and in short order that the strategy has not gone as planned, a Jefferies analyst said. The forecast cut comes just days after the Memorial Day weekend, considered to be the beginning of the U.S. summer travel season, the most profitable season for airlines. And that's another powerful point here. Is the timing of this cut just one day after Memorial Day weekend. They're announcing a cut to their forecast. So obviously this record travel demand, something they saw over Memorial Day kind of spooked them a little bit. American Airlines stock down 8.5% this morning, trading at $12.29, down $1.15. All right, let's talk about Japan for a second, guys. We got to keep an eye on this one. This is the chart of the USD JPY. This is the number of dollars it takes. The number of yen it takes to make $1. And as this chart moves higher, this is the Japanese yen moving lower. And what I want to point out is a couple of key points here. All right, right here, guys. This son of a gun. Come on, TradingView. This was when the Bank of Japan intervened in the Forex market on April 29th. They dumped about $60 billion in order to buy yen to try to strengthen the Japanese yen. And it worked for about 3 days. We saw the yen drop to about 151 to the dollar. And ever since then, we're watching the yen move lower again. Is this true? As this chart moves higher, that is the yen moving lower. So the second the Japanese stopped messing around with the foreign exchange market, the yen started to decline once again. And now we're back at 157 and a quarter, almost back up to the 160 we were at where the BOJ intervened. So the collapse of the currency in the world's third largest economy continues here. It's been going on for years, really, but in particular, it's hit its stride in the last few months. The BOJ has intervened. It was a Band-Aid solution, and that solution has already almost wore off. While that's going on, check out the chart of the 10-year JGB, or Japanese government bond. This is the interest rate for locking up your money in yen for 10 years. And look at the big jump yesterday, back over 1%, which we haven't been at in well over a decade in Japan. Currently at 1.084%, up almost 5 basis points this morning. We're taking a big jump, probably because of the big jump in U.S. interest rates, putting a drag on the Japanese borrowing cost as well. Now, look, Japan has something like 265% debt to GDP. So what Japan really needs to do is they need to raise their interest rates something in line with what the West is charging in order to stop that yen carry trade, which is seeing people borrow yen into existence, trade them for dollars, driving the price of the yen lower, and then they take the dollars that they bought and they bid up U.S. assets. Well, the Japanese interest rate is still so low that it's profitable to do that. You can collect the difference between the interest rate. For example, you can borrow money for 10 years in Japan at 1%, come over here and lock it up in a 1-month U.S. Treasury and get 5.37%. And so the gap between those interest rates needs to close. But as that gap closes, Japan's budget becomes, well, insolvent because they have 265% debt to GDP in that country because of all the money they printed and borrowed. And if they don't let that gap close, then their currency is going to keep collapsing, which is going to lead to spiraling inflation in Japan. So Japan is about to reap the whirlwind for this experiment, this ludicrous experiment in modern monetary theory. And the BOJ is sitting on their thumbs doing nothing right now. I mean, they had that. We raised interest rates from negative 0.1 to 0. Congratulations. Here's your cookie. Take the rest of the year off. At some point, they're going to have to raise rates meaningfully. And I don't know what the Japanese government is going to do when that happens, especially not as Japan really builds out their defense spending, because they're like getting in on the whole World War III thing as well. So that's a story to keep an eye on. The BOJ has been eerily silent through this last couple of weeks here. Meanwhile, Abercrombie & Fitch posts its strongest quarter ever as sales jumped 22%. And guys, this is a big dent in the narrative of the American consumer and his struggles here. Because if the American consumer was in such dire straits, where is he coming up with the money to increase sales at Abercrombie & Fitch by 22%? My money is on buy now, pay later, Klarna, Affirm. It's also on credit card bills. But fantastic quarter here from Abercrombie & Fitch. 22% growth. Now, Abercrombie, they also run the Hollister banner. They spent the better part of the last decade transforming themselves into a retailer. This is CNBC's words, nearly unrecognizable from its 2000s heyday. So just a fantastic quarter here by Abercrombie & Fitch. Although the stock's performance up 2.4% on 22% growth in sales, kind of a lackluster reaction in the stock. It's trading at 156.09 right now. Probably because Abercrombie & Fitch has had a fantastic stock performance year to date, starting the year around $90 a share. Now it's at $155. So it looks like a little bit of this magnificent earnings report was already baked into the stock, and that's why it's having something of a muted reaction here. Meanwhile, Dick's Sporting Goods is also having one heck of a quarter here. Dick's Sporting Goods raises guidance, says shoppers are spending more on sneakers and athletic gear. Let's see. Dick's Sporting Goods raised its full-year guidance after shoppers spent more on new sneakers and athletic gear at its big box stores. The company's comparable sales grew 5.3%. That's big. A lot of the retailers we're seeing same-store sales are falling. It's not happening at Dick's. It's moving the other direction, and in a big way, 5.3%. That's more than the rate of inflation. So it's not just higher prices that are driving this stuff at Dick's. You've got more traffic. You've got more items leaving the store. By the way, that 5.3% well ahead of the 2.4% uptick that the analysts had expected. And the footwear and apparel market has been sluggish over the last year, but are beginning to show some signs of life. So when it comes to retail, guys, I guess the takeaway from this is it's a stock picker's market. You really got to pick the winners and losers. If you're just betting that all retail is heading lower, that's not going to be a winning bet. If you're betting that all retail is heading higher, that is also not a winning bet. You got winners and you got losers here. You got your targets are getting crushed. You know, a lot of your restaurants are getting crushed. These discretionary restaurants are hurting. But Dick's and Abercrombie and Fitch doing pretty good here. Dick's stock right now up 8.7%, trading at almost $212 this morning. Some silver linings in the retail space here. And I just have to say thank you so much to Zeeble Fritz. Thank you, Z, for becoming a Melonhead channel member. I appreciate that very much. Thank you for supporting the channel. Everybody got links down below should you feel so inclined. And I have got M&J says, congrats, Justin, on second grandbaby. All right, Justin, congratulations, sir. Thank you for doing your part to stop the collapse of the birth rate in the United States and the Western Hemisphere, guys. Look, birth rates are falling all over the world, in Asia, in the West, in Europe. Now, who'd have thought we'd ever get to this point? But look, if we want to save humanity, save civilization, then we all need to drink up and make bad decisions, guys, because we're just not having enough babies. So, Justin, congratulations, sir, on the new member of the family. I wish you all the best. Hope mom and baby are doing well. Thank you, M&J, also for supporting the channel. And Darren from Suffolk says, NVIDIA is now worth more than the entire German stock market. Absolute clown show. Rich are feeding at the trough, and the middle class and poor are getting their sloth leftovers. Hashtag nauseating. Look, guys, NVIDIA is the stock market at this point. I mean, can you name me one stock that would not fall in value if I was proven right about what NVIDIA is doing and NVIDIA were to have some kind of a collapse like Sun Microsystems had during the dot-com bubble? Is there one stock that would survive that other than inverse ETFs that would probably rocket at least until something happened with the parent companies of those ETFs and they're like, whoops, we lost all your assets, and they go belly up and people lose everything. But there's a couple of days in a row now. Yesterday was another one where it's like the market sells everything and buys NVIDIA. And I posted this on Twitter yesterday about what's going on with with Google. Alphabet. Alphabet stock has added 86% since ChatGPT was released. More than $1 trillion in market cap has been added to Google. And what big change has been made at Google that's driven this? They've turned their signature flagship product, Search, into a Reddit-fueled shitbot that tells people to glue their pizza together, eat rocks, and jump off of bridges. And by the way, those are screenshots of actual Google results. AI may eventually become amazing technology that does amazing things and leads to a big expansion in human productivity. That may happen. It probably will happen, but it hasn't happened. And it's not going to happen anytime soon because all of the AI products that have been put out so far are garbage. And yet $6 trillion of market cap has just materialized out of thin air. And it's not AI products that created that $6 trillion in market cap. It's the build out of data centers anticipating demand for those AI products, demand that right now does not exist. And I've spent so much time in live streams dedicated to covering this. I just don't want to keep doing it. But guys, it's a bubble. More and more people realize it every day. Sooner or later, everyone is going to realize it. And when that happens, all of these arrogant a-holes that are posting this sometimes hilarious crap on X and Twitter about this whole theory of round tripping, all of these classless POSs are going to claim that they knew all along and that they called it, even though right now they're telling everybody to pile in. So thank you, Darren from Suffolk. Appreciate the super chat, support of the channel. Thank you, Viv B, for gifting 10 Nobody Special Finance memberships. I appreciate that very much. Guys, if you receive one of those memberships, be sure and send a heartfelt thank you to Viv. Appreciate the support of the channel, Viv. And thank you to Mark Fragola, who says Janet threatens Japan when they sold bonds before. Yeah, I can just imagine Janet, she's over there like, listen, Governor Ueda, if you're going to sell our U.S. Treasury bonds, then you better consult with me first because it would be a shame if I had to take out my paddle and my whip. Ask Jerome Powell how it feels to have my whip across his backside because I've been physically dominating him for months now, and I've got my sights set on you, and you will address me as Mistress Secretary Yellen from henceforth. That is the fiscally dominant Janet Yellen. And yeah, there was a little bit of consternation between Japan and the U.S. Treasury. Yellen said, I think it was 2 weeks ago, when Japan intervened in the Forex market, it was something like, we expect interventions to be limited and done in consultation, meaning like, hey, you better not do it too much, and you sure as hell better tell us before you do it. And the Japanese were just over there like, no comment. So I don't think things are really simpatico between Janet and her counterparts over in Japan right now. And Japan's got to do something. And they're sitting on a $1.1 trillion war chest full of U.S. treasuries that are looking really good right now if they want to go dump those to support their currency. And of course, that will throw a monkey wrench into Janet's plans, who's just doing everything she can to get that octogenarian a-hole reelected. So anyway, thank you very much, Mark Fergola. I appreciate the super chat, support of the channel. And thank you, TIS, the Inflation Situation, who also gifted 10 Nobody Special Finance memberships. Again, guys, if you received one of those, send a shout out, send a thank you to the Inflation Situation and to Viv B. Thank you guys so much for supporting the channel. And KDM, what's going on, brother? He says, been a while since I checked in while working in the NW. Got to pay on some toilet seats for Janet in the Fed conference when I visited Jackson Hole, though. That just sounds unsanitary, KDM. And, well, it couldn't happen to a nicer bunch of folks, but I can't exactly endorse such vulgarity. And don't mistake me laughing at that for an endorsement. No. Guys, please wipe the seat when you're done. That's just good hygiene. Thank you, KDM, for the laugh and the support of the channel, sir. And Metal Seer, I like the name, Metal. He says, Yellen impression, please. You already got your Janet. How many times do I need to do my Janet? Is my Janet as strong and resilient as our banking system? I hope so. Although every now and then my Janet starts to sound a little bit like John Malkovich, and I'm working on that drift. It just needs a little bit of help there. So I don't know. It happens the same time like my Sean Connery drifts into Bane all of a sudden. It's weird, but I'm working on that. Thank you, Metal Seer. Appreciate the super chat, the support of the channel. Guys, just going on. Mistress Secretary Yellen, LOL. Thank you, Madison. Guys, every time I get a super chat and they're like, do your Yellen, it feels like somebody drops a quarter in the hat and they're like, dance, monkey, dance. Thank you, Madison Hypes, for being a member and for supporting the channel. And yes, the Secretary Yellen. And thank you, Harmonair LLC. Tinfoil hat theory. Merchandising, says Yogurt. Let's see. What's a tinfoil hat? Janet's whip, you mean assassinations of officials. Ooh, that's getting dark. I hope it doesn't drift into that. By the way, that whole thing going on in Iran, we haven't heard a lot from Iran and the leadership in Iran since that helicopter accident that saw the Iranian president killed just a few days ago. No talk about the possible causes, mechanical failure. Of course, they're very quick to say no foul play suspected, but hey, since we're tinfoil hatting here, assassinations, let's hope not. Although, who was it? There was the former prime minister. I can't remember his name. He was just assassinated in Japan not too long ago. So, I joke around with the tinfoil hat, but let's be honest, guys. People have been killed for less. Let's not rule it out. It is the 2020s. Thank you, Harmony LLC. Appreciate the super chat. Thank you, Lisa B. Says you dance so well. No, I do not dance so well. Trust me. I don't frequent the dance floor because when I do, it's pretty much the dance of Caucasia, if you will. It's the dance of my people. I got about as much rhythm as any other white boy you ever met. Thank you, Lisa. I appreciate that. And thanks, Viv B. Says, yes, Jack, but you're our monkey. Thank you so much. I am so happy to be your monkey. I love me some bananas as well. Thank you, Viv B. Thanks, everybody, for the super chats and for supporting the channel. Thank you to my channel members and magnanimous melonheads and Patreon supporters. Appreciate everything you guys do for the channel. Looking forward to talking to you guys this afternoon at noon for our weekly get-together over Zoom. Links down below to all that stuff, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.